please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Thanks, Mangalam, for that. So yes, I have with me Jay Shroff, the man who's actually behind this whole $4.2 billion very large overseas acquisition that UPL has announced last evening. Jay, thank you very much for talking to CNBC TV18. You've broadly given the details about the whole deal, the structure and everything. But just for my viewers, quickly, if you can tell us the whole contours of the deal, and then I'll ask you about the synergies and other benefits.
Thanks. Yeah, I think we know this asset very well. This asset has been owned by Primera, and even when they bought it, we looked at it very carefully. This time around, about a year ago, they followed a process to sell it. We did a complete due diligence, and then we couldn't agree on the deal. It came back again about 60 days ago. And we were able to move quite quickly because we were able to agree, and we were quite confident that the business of Arysta is completely complementary. We were surprised how complementary the business is and how much optimization we could do to the business to make sure that it becomes very profitable for us and it becomes very accretive to us. We were in discussions with ADIA for a long time. They've been talking to us about possibly doing something with us even before this deal emerged. And when this deal emerged, they agreed to partner with us on this deal.
Jay, from 12 months back to now, because you've closed this deal in the last 2 months, what has really changed, and what made you finally decide to pay top dollar $4.2 billion to buy this asset?
So we think it's an extremely good deal because we have our cost optimization. What we've announced is a very conservative number of about 200 million. We have sales synergies which will be in excess of that, and that makes it a very accretive deal. And what we are paying for is much lower than what it looks like today. As far as the Arysta business is a high quality business, their earnings have gone from almost 350 million to 420 million, projected to be 480 million this year. That makes it a very attractive deal for us.
Okay, I'll ask you and I'll grill you more about the EBITDA of Arysta and the future projections. But first, to break up this whole deal, $1.2 billion is equity which you're going to pay through UPL Corp, which is a 100% subsidiary of Mauritius, and $300 billion of debt. The biggest worry for investors right now is the huge debt that you're looking to get this for the deal to go through. How are you going to allay the fears of that?
So I think we are a very financially, UPL has always been very conservative. We believe that we are an investment grade company. We've talked to all the rating agencies, and they've confirmed to us that they will maintain, even after this deal, maintain investment rating grade for us. We've got financing from very attractive terms. Our financing costs are below 4% for the whole transaction. They've given us a $3 billion loan with a bullet payment at the end of 5 years. So there's no stress on the company, and there's no and we believe that just UPL on its own and Arysta on its own are probably the fastest growing companies. We believe that UPL will continue to grow at 10-15%, and Arysta also has growth plans. And with that, our earnings growth for both the companies are expected to grow proportionally.
Sure. I'll ask you about earnings and growth as well. But first, historically, UPL has paid around 6 or 7 times earnings for their overseas acquisitions. This time, you'll have paid close to 10x on the FY18 EBITDA numbers that Arysta has reported. Why such a premium? Was there a
so really it looks like a premium, but actually, in fact, when you look at the complementarity of both the businesses, the synergies which we have, the distribution leverage which we will get because of our size, it is well in line with what we have paid in the past. In fact, I believe it's even lower if you look at the optimistic view. Even in the worst case scenario, we had our consultants review all our projections. Our partners at IA and TPG both also reviewed our projections. And I think we halved that. And then we are talking about numbers. So I believe that this deal for UPL shareholders is fantastic. Okay. I think as time goes on and they understand better the details of the complementarity of the business and how much we'll be able to benefit and how much leverage we'll be able to get on the ground with a bigger size business in the US, Brazil, South America, Europe, Africa, East Europe, which are all growing markets. Emerging markets will have a tremendous strength. Even our product portfolio is completely complementary. Sure. We have very little product overlaps. So that also gives us a complete portfolio. We'll have one of the largest portfolios of any company in the industry worldwide, even companies bigger than us. We'll have a much better portfolio. The biological solutions business of Arysta is fantastic. The world is talking about food safety, etc. And this whole portfolio is going to continue to grow. UPL has launched some businesses in biosolutions. We have our whole drought climate smart technologies, and all that with size, we will be able to roll out our projects much faster.
Okay. I'll ask you about the product synergies and the geographical synergies. But first, which probably was a key discussion point within the analysts as well yesterday on the call, was a $450 million EBITDA that Arysta reported this year. Given the lumpy style of the businesses of Arysta for the last 4 years, there was a bit of doubt on the $450 million run rate which Arysta is going to deliver. Are you confident that $450 million and upside is possible in 19 and 20 from Arysta?
I think it should be better than that. Okay. I am confident that from whatever we have seen, markets are improving. Okay. Arysta went through a merger of 3 companies. Sure. They bought Chemtura, they bought Agrify. All that integration has just happened. They put it all together. And we are buying it just at the right time, where all this is all the benefits of all the integration which they have done on their side. And they are a manufacturing-light company. UPL is a strong manufacturing company. Sure. That's our core competence. That's also completely complementary. We think we will be able to get a huge benefit out of that.
Okay, if you can now explain to us the synergies that you're talking about, because in the press release you've said close to $200 million of EBITDA synergy that you're going to gain in 2020. If you can just break it up in terms of product, in terms of geographies, how is it going to benefit you?
So that is really optimizing synergies. We not even talked about sales synergies, but if you look at our businesses, it's completely complementary. So if you look at their focus in Brazil, they are on fruit trees, wines. We are on row crops, cotton, soybean, corn. So it's completely complementary. Our portfolio exists, but we don't sell to those customers. Okay. They don't sell so much in the soybean cotton area. Okay. So I think that's completely complementary. In markets like Chile, we are non-existent. They are market leaders. Okay. So our whole portfolio, which we have registered, we will market through that. Okay. We have very, very little presence in East Europe, Russia. They are very strong there. This gives us completely... and these are high growth markets. Right. Africa, high growth market. They are very strong. They're the leader in Africa. UPL has a small presence. This will give us a huge jump. So other than the cost optimization and rationalization synergies, we think the sales synergies are even much more, which we really haven't talked about to our analysts either.
Okay. What about the geographical synergies? Because I got a brief idea about a few countries where you all are not there, which you'll get an access to. But you all are there in LATAM, you all are there in a lot of the other overseas markets as well. How much of that is going to be synergized and how much there is an overlap as far as geographical presence is concerned?
So Arysta has been with the Japanese parentage. They have a lot of niche products for niche crops. Okay. UPL is more in the large crops. So this whole portfolio of theirs, which brings us into fruits, vegetable markets, and that is completely complementary. And we have a portfolio which can sell, but we've never put any effort. Now with their sales team and their access to all these customers, we can sell that. In many other markets, if you look at it, they have a fantastic portfolio of biological solutions with our products, and theirs is completely complementary.
Okay.
And we believe that that is, we've not been able to really, say exactly, but that really makes, that's excited UPL team the most.
Okay.
If you talking to my guys, they're really excited. Also, they have a portfolio of patented products. We have our portfolio. Combining these products to give more complete solutions will give us a huge advantage in markets, and particularly to give farmers more complete solutions.
Jay, in that $4.2 billion that you're paying all cash, if you can just briefly tell us what sort of goodwill amount is there, or what sort of fixed asset is there, which is part of the whole deal, so that it gets a fair idea for an investor as to how to value this company.
So in our business is a very IP oriented business, and they have a lot of patents. We have a lot of patents. Fortunately, they don't have manufacturing assets.
Right.
They have some formulation plants, and these are also very complementary. We believe that we will be able to use each other's strengths there. They have some manufacturing facilities in different parts of the world, and we have too. In terms of goodwill, I think that when you look at the earnings and the ability to get synergies, yes, we will do it and we'll write it off over 15 years. But we don't believe that it will impact our earnings. Our earnings will continue to grow, and this is EPS accretive deal.
Yeah, in fact, that was my follow-up question, that in the press release itself you said by 2020 you expect 10 to 12 rupees of EPS accretion for the combined entity. Just share the vision with us as to what sort of number you look for in terms of combined sales and combined EBITDA for the whole group in 2020 when the synergy starts flowing in.
So I believe that UPL, Arysta all are growth-oriented companies.
Okay.
Both the companies have forecasted growth, whatever we've seen. Markets are very, very buoyant right now. We are seeing good sales as UPL, and I'm sure they are too, whatever we've seen. They are ahead of budget in their business, as whatever we saw when we were looking at the details. We think that will continue. And so the sales in 2020 will be, we expect this year's sales to be close to 5 billion.
Okay.
I won't be surprised if we continue to grow at least 10%. So it should be close to 5.5 billion at least.
In 2020. In terms of top line?
Top line.
And
we have to still put all the details together, but I won't be surprised if we don't achieve that.
And in terms of EBITDA, what is the internal projection?
So we expect that EBITDA both the companies are about 20-21% EBITDA.
Right.
We think with the optimization of optimizations, we should get it up a little bit more. So maybe 21-22%.
So the whole point was whether that 20-21% which UPL is benefiting or delivering right now in that post-merger scenario, will that continue or will that be a dilution?
No, there won't be any dilution. We believe it'll improve.
Okay. Jay, the other part was the UPL Corp through which you have done this whole deal. $3 billion of debt and $1.2 billion commitment coming in from ADIA and TPG. They will be holding 22% in UPL Corp. Tell us what's the deal with them as to by when they have an exit option in UPL Corp and whether you are also participating.
I think ADIA, as you know, is a long-term investor, and I think whatever we understand is that they like the sector. Food security is an exciting space for investment for many of the large funds and particularly sovereigns. So I think that they are looking at it long term. We've had some discussions, but we will have we'll have a board and we'll discuss it. And as and when we have, there's nothing documented.
Sure. But is listing an option for UPL Corp going forward? Is that going to be one of the options for exit to?
Absolutely.
Okay. Will that be in 2020, 21, or there is a timeline?
We haven't discussed timelines.
You haven't discussed that yet.
They are looking at it long term. They said, let's run the business. Let's not worry about that. If business is successful, then this is much. I'm sure we'll find the right solution for them to.
Okay. So in that $3 billion that you are taking as debt, what sort of numbers you have worked out in terms of payback period for UPL for
I think
that
that I think we should. I mean, we've as we said earlier, we're invested that our leverage in 2020 will be less than 2.5, and we believe that in a matter of 3 years we should be able to, generate enough cash from the business to repay this. Of course, ours is a 5-year loan, term loan.
When you're talking about 3 years, you're talking from 2020 when the synergies start flowing in?
Yeah.
So by
I mean, accumulated with the synergies and with the growth in the company, we are already a $1 billion EBITDA company.
Sure.
And with the growth, we'll be able to generate enough cash to be able to, have very low amount of leverage on the company. And I think that's you're just talking 2020. 21, 22, I think we will have very low gearing.
Tell us about Arysta, because not we as an Indian investors, we don't know much about that company. You all have done enough due diligence in the last 1 year. I believe they follow a very asset-light model. Is that going to change? What's the next game plan for Arysta once it gets folded into UPL?
So Arysta has developed a very interesting model. Unlike UPL, where we invest in plants and basic manufacturing and other, they are a company which has really not invested and have ability to license contract manufacture with many companies in China, in India, in Europe. And I think it's worked very well for them, and I think I'm excited to learn how they do it, use our expertise, and then leverage on that capability to also outsource more manufacturing.
With this acquisition, I believe UPL leapfrogs into the top 5 in terms of the global agro players. After this acquisition is digested with, is there a goal for UPL to be in the top 1, top 2? Will you guys be looking for more acquisitions in the future?
So UPL, I mean, if you look at our past, every 3-4 years, every 5 years, we've really grown a lot.
Yes.
So every 5 years, we've almost doubled our business since inception. Right. So we are a growth-oriented company. I don't want to promise something which, but once we put the business together, we believe that in this industry, size matters, and it's going to be able to allow us to invest in new technologies, new solutions, bringing a much more complete portfolio to deal with farmers. So I think it's very, very positive, and it'll give us a big edge in terms of, they're very strong on seed treatment technology. They have a BioSolutions business. All these things are the business of the future, and bringing that in UPL portfolio will really help us to give an integrated solution to the farmers. Okay,
Jay, before we wrap this, I believe again I'm going to ask the same thing. The biggest fear for investors right now is a big debt and the kind of synergies that you're going to benefit from that, merge entities, like after the synergies are over. Again, just to reiterate, are you confident of achieving the numbers of 2020 of merge synergies of close to $200 million of EBITDA?
Yeah, we are very, very comfortable. These are conservative numbers. Okay. We've had lots of discussions around this, and we believe that there's no issue in terms of the debt. We remain investment grade. I think the rating agencies are extremely conservative. They wouldn't have given that if there was any chance of that. Okay.
Jay, thank you very much for talking to CNBC TV18. Appreciate giving us time, and congratulations for the very large transaction that India has done to become the 5th largest player in the world. Thank you very much.
Thank you very much.
Thank you.